Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. All right, we're back. What is going on, my friend?
Not much, man. How you doing?
I'm good. Man. The kids had their last day of school today. Of course, this is a couple weeks ago from when people are listening to it, but yeah, just finished up school for the year, so summer is officially on.
Wow.
So right after this, I'm gonna head out to the pool with everybody and celebrate, and then go to a late baseball game for Blake.
Nice.
Yeah.
What
summer's
position
here.
does Blake play?
They switch. They don't put them at just one position at this age. They're still developing them in different positions. So he plays a lot of outfield and third base and catcher
Third base.
and occasionally pitcher.
Nice.
So, I mean, you burn through pitchers in Little League, man. They do like, maybe one
Tell ya.
pitcher every inning.
Yeah, Anthony's team, there's some kids that are throwing BBs.
Yeah.
Like, yeah, I mean, probably high 50s, low 60s, and at 46 feet away, it's zipping in there,
Yeah.
making the mitt pop. It's not Little League World Series heat, like they're throwing 75, 80 miles an hour at 12. But still very, very impressive, some of these kids. But,
That's fast.
It
And
is. It's fast.
Hannah and I went to a Twins Royals game at Target
Yeah, I
Field
saw that on
earlier
the
this week.
Facebook. Nice.
Yeah, so that was fun. We had champion level seats.
Because
So
you're a Royals fan.
I'm a Royals fan, so I was wearing my Royals shirt. She had a Twin shirt on, but we had champion level seats. So you like drive up. It's valet parking. You walk right into where they
cool.
have the World Series trophies from '87 and '91 and
Yeah.
everything.
My boy Kirby Puckett.
Yeah, yep. Rest in peace.
Yeah, great
Uh,
player.
But they had tons of food. I had prime rib and
Oh, nice.
all kind. They had a candy, like going into a candy store, a whole wall of candy. You just fill up a little cup full of whatever you want and take it to your seat, and free drink, not free drinks. Everything is included. It was a lot of fun. And then leaving, and then we're sitting right behind home plate. I was like 5 rows up, and you can see these guys. I mean, you can see their faces. You can hear them talk.
Yeah.
Some of those guys, I was kind of surprised. Like, I was like, that guy's not that big. And some of the other guys are huge.
Yeah.
So they got all the ranges in sports. But I mean, we were looking at the ages. They show the birth dates of every dude up there.
Yeah.
And it's all like born in 2000, born in 1998.
Yeah.
Like almost every one of them was under 30 years old.
Yeah, for sure. And they're all millionaires.
Yeah. Hopefully they stay millionaires. There's a
Yeah.
30 for 30 I want to watch called Broke. And
Yes.
I've only seen the advertisement. I want to watch that about
They're-
professional athletes who go broke.
Yep. Just
Yeah.
terrible with money. They got their boat. They got their entourage, and
Yeah.
they get just irresponsible young man behavior. You
Yeah.
knew who was wicked smart with their money was Shaquille O'Neal.
Shaquille. Yeah. Shaq. I think he lived on 25% of his income.
I'm pretty sure anecdotally, I heard somebody say that he, when he first started, he put $1 million a year into an annuity
Really?
so he could guarantee himself a future income.
Yeah. I wonder
if it all went wrong. So
I wonder if he put some into whole life insurance. Hopefully somebody turned him onto that, like Waka
Yeah, it's
Flocka
better.
Flame. Waka Flocka puts
Yeah.
his money into life insurance.
yeah, that's right.
Yeah.
It's a better place to put money, and Nelson talks about that in his really in building a warehouse of wealth. He talks about annuities, briefly, but you can annuitize your whole life policy, and we've talked about taking passive income off it later in life. But anyway, that's neither
Yeah.
here nor there.
Well,
Hey.
I do love, while you're on the subject of Shaq, I love something he said that I attribute to him, where he said,
We're not rich. I'm
Yeah.
rich.
He tells his kids, we're not rich. I'm rich. So that's-
My kids know that quote too.
Yeah, I love
think
that.
it's pretty funny.
Yeah. Yeah.
But no, it's good.
Anyway, so you had some exciting news today. You got something at work.
I did, ladies and gentlemen. I got my retirement orders today from the Army.
Yes. It's about
So
time.
approve retirement for 28 February 2025. First day as a retiree 1 March. So and it'll
28
be
Feb. Oh, because I thought you were waiting until next summer, but you're talking February. That'll come up quick.
yeah, it'll end up with 22 years, 9 months, 27 days of
Yeah,
active
it's
duty.
2 years, 9 months, 27 days of wasted effort, man.
I said that today at work. It was like a couple of years too long.
Yep. Yep.
But no, it's been good, and I've enjoyed the place that I'm actually working now. I work with some really good people, and that's kind of helped sustain me through this assignment
Yeah.
last few years. So
Yeah. Good.
good
That
people.
that makes all the difference in the world
Yeah, for
right
sure.
there. So, well, we got a good comment from a listener that you wrote down here, and
Yeah.
he's a listener and a client, right?
Yep.
So go ahead. You can speak to Ron's
Yeah.
comment there.
Yeah. So Ron, a client of mine, and here in Virginia, and he said something that we were just texting back and forth yesterday, and he's very smart, but he said, if you could invest in a business that could not fail and that was guaranteed to be profitable, how much would you want to invest in it? And that's kind of a spin on what Nelson says in Becoming Your Own Banker. You know, if you could put money into a system and get it all back many times over without tax, how much money would you object putting more money into such a place or into such a system? And of course, the answer is no. You'd want to put as much money as possible, and that's the whole thing, right? It's a business that's guaranteed to succeed when you properly, get a properly designed policy, whatever that means, and pay high premium relative to your income.
Yeah. Kind of another way to say that is that I've read in a book recently is, hey, if you put your money into this, hey, if it turns out you don't need it, we'll give you your money back. But if you do need it, we're going to give you dollars for the pennies that you put into it.
Mm,
Oh, how great is that? Like you're going to get your money back if you want it back, or you can just use it and take loans against it the whole time. But when
that's the
you
smart
actually need
way.
it, when you're gone, it's going to pay out dollars to the pennies that you put into it to your family. It'll
That's right.
create cash. So,
Creates cash when cash is needed.
yep, when it's needed most.
Yeah.
So that's awesome. So I had a conversation with a couple that I've been working with, and
Yeah.
we actually had, you know, you know who it is because we met in Vegas when we were out there for the think tank. But this couple has, they caught IBC. The light bulb came on. They read it. They're like, okay, somebody told them about it. They looked into it. They studied it. They listened to the podcast, and they're like, okay, we need to be doing this.
Oh yeah. Yeah, they're
Yeah,
good people.
yeah,
Yeah, yeah.
good people. So, but what happened? They recently, I mean, and I was looking at their finances. They have, chunks of money in several different places,
Mm-hmm.
including their home, which is paid off. And they were under that traditional guidance of, hey, pay your home off, pay it off as fast as you can, and now they've got no mortgage payment but a ton of equity. But what happened recently was their home flooded, so they got some major emergency bills going on, and insurance, of course, is going to cover the replacement value or whatever the value to put it back to what it was. But they want to go above and beyond because you might as well, the place is ripped apart. You might as well make it a little nicer than it was.
Sure.
So
Add
they need
value.
extra cash. Well, guess what? Now they've got tons of equity in their home, but the bank won't give them a refinance because the home's under construction because it's not finished.
Of
So they
course
can't get
not.
it. They can't access the equity in their home. They've got a HELOC that's getting close to maxed out. So I asked the question. I said, "How much capital do you have access to without penalty, taxes, or permission?" They said zero, zero, and that is not uncommon. Unfortunately, it's good that they figured it out. Would have been nice to figure it out earlier, as always, but figuring it out now, and now the light bulb actually coming on saying, oh, okay, this is why you want to put your capital somewhere that you have access to it, where you have control over it. So
It's almost like the future's unknown.
almost like the future's unknown. And yeah, you can have all the equity in the world, but in an emergency, can you access it? Maybe, maybe not.
So In that book, Nelson says that your need for finance during your lifetime is greater than your need for protection. In this case, death benefit is what he was talking about.
Right.
And boy, was he right again.
Yeah. He's he's right pretty often. I've yet to
He's just right.
I've yet to
He's
prove
just
him
right.
wrong on anything.
He's just right.
Yeah.
Uh,
Yeah. So, that made us think, man, not only is, setting yourself up for success, right? Success is your duty. I stole that quote from Grant Cardone. Maybe he stole it from somebody else, but I remember him repeating that over and over when I used to really follow him closely. And I had it written on my whiteboard: success is your duty. And that's really what we want to spend some time talking about today is success is your duty. So what does that mean? We have a lot of examples of clients who have bought into that idea that, hey, I can't abdicate my success to somebody else, to luck, to some company, or riding the coattails of somebody else. I have to create success myself, and it's my duty. And if you go into it with that attitude, it is your duty to do that for your family, because, like you said, the future's unknown. What's going to happen tomorrow? I don't know, but there's a lot that could go wrong,
yep.
right? Nobody's coming to your rescue, and your job can quit you anytime. How many people know somebody, if not themselves, they know somebody very close to them who's been let go of a job unexpectedly,
Sure.
right? So how have you've prepared, like you've got your retirement orders in hand,
Yeah.
and about 5 years ago, you started preparing for retirement. You didn't prepare right now. You're going through TAP and, where everybody starts to prepare like a year out. Like you started a long time ago.
Yeah, I was fortunate enough to fall into this thing, and I guess I can thank you, and I was thank myself because I was somewhat bright enough to see the value of what's in that 92-page book. Uh, but yeah, what I've been seeing in these briefings that I've been sitting in is a lot of people they're way behind the power curve. They're 12 months out, 6 months out, in some cases 9 months out from the Army ATM or the Navy ATM or Air Force ATM machine, or whatever their government paycheck is from the military, going away for the most part, right? Or being cut by 60%, let's say. So yeah, I don't know. I guess years ago I didn't want to be. I wanted to have an abundant life, whatever that means. That means something different to everybody. But I decided early on. I was like, well, what do I need to accomplish what the life I'd like to live? And I needed to make more. I needed to make more money. I needed to be more productive. So we got rid of cable, and I used to be sitting at the house when I'd come home from work just before kids, just screaming at Fox News or whatever.
Yeah.
And posting pictures about it and stuff on Facebook. Like, what a waste of time. And then I guess 2016, I started to read some books. I read some Kiyosaki. I read some Millionaire Next Door. I read some other stuff, and just got my mind in the right place. And it also occurred to me in that journey that I don't really enjoy working for other people.
Yeah.
Like I always have something smart to say or sarcastic, and it's not good. It's not good. But now I'm relying on myself, right? And if I don't want to take a call right now, then I won't take a call right now. But yeah, you've got to prepare because you're right. It is on you, but you have to set some achievable goals, set some goals that might be way outside whatever you've ever dreamed of, right? And we've talked about this, amongst ourselves, that we've been fortunate enough to have, tremendous early success in this business, which not many people can say. And I feel very fortunate and very lucky to have had that. But then we found our passion, we love this, and we really enjoy doing it. So it becomes not like work. It's like it's our dream job, and it couldn't be better. So, but
Right.
anyway, most people though, and I get asked all the time, "Hey, you gonna go get a government contractor job or go get a government job or do whatever?" And that's very typical, and it's fine. People are gonna go do those things. That's someone needs to do it, I guess. But it's just not for me. Um, I I like I like relying. I just like being on my own and doing what I want to do when I want to do it and how I want to do it. And there's great no, but there's stress in it, right? And you made the switch from a corporate guy to a pilot to the W-2 to the all right, I'm cold turkey entrepreneur. That's a very tough thing to do, and it's very risky, right? Because there's
Yeah.
no just automatic paycheck coming in, right? It's you have to generate, you have to create the paycheck to give to yourself. So,
But
but we
is there any job that doesn't involve stress? Like, is
no,
there any way to earn money, to earn a good living that doesn't involve stress? I don't know of any. So
no,
you're gonna have
it,
stress no matter what you do.
yeah, there is. I think there's varying levels, and I've worked in the last 6 years really for the Army, but I've been in organizations that have a heavy, government service GS population. And I think it depends on their positions. There's certain levels of stress. Some of it's self-induced, but because to me it's like, come on, guys, this is meat and potatoes here. Like
Yeah.
it's not that bad. So, the
Yeah.
grass is always greener on the other side. But yeah, I mean, of course there is. I mean, there's just general life stress. Work is
Yeah.
just one aspect of that, I think. But we also know people that other people that are preparing for that, whatever it's life change, career change, military retirement, whatever it might be, that have taken upon themselves to prepare properly. And it all started with, and I think this is kind of the lesson here, is it all started with investing in themselves and investing in their own education. How do I underwrite a 400 unit apartment complex? Well, it's a mastermind. Oh, there's someone that can teach me how to do that. And I
Hmm.
have to pay for that service, right? Because that guy is a professional and the best at what he does. I want to learn from that guy. Or I
Yeah.
want to learn from Grant Cardone, or I want to learn from whoever. But all the successful people that I've known that have made that switch from W-2 to entrepreneur, they've all had some sort of mastermind or mentor or various masterminds and mentors that have
Yeah.
helped them along that journey.
Either that or if they've had a very hard road to hoe all by themselves.
Sure.
Because I mean, if you want a shortcut to success, there's no shortcut that doesn't require hard work, but there's certainly shortcuts on the knowledge that you can acquire. You could learn it
Yeah.
yourself, or you could have somebody else show you based on
Yeah.
what they've learned. And it
Right.
it's huge.
Don't
I
do
mean,
that.
I paid,
like your first flip. We've talked about that on the podcast, right? Like
yeah,
that was a learning event.
that was a learning event. I lost money on it. And then I joined a $25,000 a year mastermind group.
$25,000 a year.
Back when that first year that we joined, I made 30,000. I took 30,000 in income from the company,
Wow.
and I spent 25 grand, a business expense
Yep.
on a mastermind that put me around other high level
Right.
people who were in places I wanted to be, and I had access to them, unrestricted access. And then I did it again the next year. When I got
Right.
into this business, I hired a coach and paid thousands of dollars I hadn't earned yet from this business to
Yep.
learn from somebody else.
Yeah, and we still know a lot of those people. I wasn't involved in. Well, I was involved in the second one, but the single family mastermind, I was never involved with. But I know several of the people that were just through that connection, which is just interesting as well to see how
Right.
things play out. So
Yeah. But what helped me make all those transitions, which I think I've spoken about before, is I
access to
invested
cash.
in I invested in my capitalization. That I think is investing in yourself. You're putting money into something, a place that you can access that capital for opportunities. So it's really an investment in yourself. I would never call life insurance an investment. It's a capitalization strategy, the way we teach it. But talking about this whole invest in yourself, mentality, that is investing in yourself because you're putting capital away today for opportunities tomorrow that you don't even know what those are yet. But hey, if I've got access to capital, those opportunities are going to find me and I'm going to be able to seize them. And in the meantime, I'm going to get smart on something I enjoy, put myself around people who are doing the things that I want to end up doing. I mean, the first thing I did was when I wanted to get into this business was I found a practitioner on the Nelson Nash Institute who lived close to me and I met him for coffee. And he's still one of my very good friends today.
Yeah.
Yeah, we go hunting every year.
Yep.
And he'll be a not too far of a neighbor for you when you move.
Yeah. I own property or actually not too far from him, and then where I'm moving is just a little a bit further, but
Yeah.
not far.
Yeah. Right. So, and having that backup plan, because your company can let you go at any time. I mean, the military, you may not be able to go past 20 years. They may say, forget it.
Right.
We don't want you.
You guys had a big riff in like 2005.
Yeah, 2006. We lost
Six.
some of my classmates. They just up and left
Yeah,
after
never
being
made
in
it
for like
past
3
first
years.
lieutenant or whatever.
Yeah.
Yeah.
Right.
Right. And when we had one in the mid, I don't know, 2015, 2014, 2015-ish, we had a big one, and they just low hanging fruit. If you had adverse action in your file, for example, like I'm pretty sure those people were all just,
Right.
gone.
Yeah.
And now because most of them are back in some capacity, right? So it was kind of silly. Now we want them to come back.
Yeah.
It's like, anyway, but you're right. You never know. When you always, watch these TV shows or movies where, dad comes home all with his briefcase and he just got laid off and mom's there to console him. And, the kids have no idea what's going on. And that stuff does happen.
It happens.
It happens all the time.
And it's not just being laid off, but it's with inflation. Like if you're banking on your 3% raise every January to increase your standard of living, you're actually decreasing your standard of living every single year. You're
Right.
falling further and further behind because inflation is way outpacing any raises most people are getting.
Yeah.
So and if you're just saying, well, there's nothing I can do about it, that's just what my job pays me, like you've given up. Like you have not made
Right.
success your duty.
Right. That's right.
You've
Yeah.
abdicated.
I often have this discussion at work in that you have to, and we've talked about it, but you need to increase your means. If you want more, there has to be money at work. Because really trading your labor for money it can be done that way, right? Like, hey, if I work hard enough, I can realize this American dream. Well, again, inflation's going to kick you down. The money printing, the spending that our government does is going to keep making that more and more unachievable. I mean, how many households now? I don't know. We could probably pull up this stat, but how many households now need both parents to labor just to live?
Yeah.
I don't know what it is, but it's higher than when our parents were growing up. Because my grandmother almost never worked.
Yeah. Well, the trad wife movement is making a comeback. Apparently, there's a hashtag trad wife, traditional housewife, traditional wife.
Yeah.
That's a big thing now. So the trad wife thing is making a comeback. You got people, well, yeah, but most people have gotten used to two family incomes. And when
Correct.
you lose one of those incomes, whew, that's tough.
Yep.
That's real tough.
No question.
Yeah, so somebody sent me, I forget who sent me this, but it's a map of the United States.
I sent you that.
That came from you? Because I heard about it on the radio locally
Yeah.
in Minnesota. A radio DJ quoted like, for a family of four to live comfortably in Minnesota, it takes $245,000 of income for that
It's
family.
the visual capitalist, right?
Okay. Yeah, visualcapitalist.com.
And I posted it to my personal Facebook the other day, or
Okay.
maybe it was this morning.
So check out that for Paul. But yeah, where I live, 245,000 just to provide a comfortable lifestyle for a family of four.
And that's an average, right? Because you have
Sure.
there's more expensive places to live. I don't know what Minneapolis is. Most
Of
cities,
course.
most urban areas are
Yeah.
expensive. You go to Palo Alto, California, the Bay Area, where our friend John lives. I was looking at a 1,200 square foot townhome that was built in 1960 it looked like a Connex that they refurbished or something. It was $1.7 million.
Yeah, that's depressing. Yeah,
I was
but you've
like, oh
got, I
my
mean, in
gosh.
Massachusetts, it's 301,000. Like, I don't know, just 10 years ago, if I just take Minnesota's number, 245,000, that you were upper middle class, living a very nice lifestyle at $245,000 a year 10 years ago.
Right. And
Today,
I
it's not.
I wonder how much like real estate prices informed this map here
That
because I'm
does, it
looking
does
at it as
take
well.
into account cost of living,
Yeah.
including real estate for sure. So that, that's probably skewed everything more than anything else is the rampant inflation of real estate.
Notice Tennessee.
Tennessee is 196, so below 200,000. So your
Hmm.
lifestyle is going to improve because you're going from Virginia at 235 to Tennessee at 196.
Right. And I would say 235 in Northern Virginia, not all of Virginia, but Northern Virginia where I am in the DC area.
Yeah.
That a decent house in my neighborhood is 800 grand.
Yeah.
And right now that's $5,800 a month, principal, interest, taxes, insurance, probably.
Yeah. So it
So,
varies by county and all that.
yeah.
But I just thought that map was really interesting because, I mean, if
Yeah.
Kansas is 197,000. When I was in high school, somebody making 197,000 had more
Rich.
money than I thought they could
They had a
possibly ever
BMW,
spend.
maybe two,
Yeah, exactly.
Mercedes Benz.
They took vacations to Hawaii. Yeah. So you've got a couple examples, I think we both do, of clients who have really taken success into their own hands. And really, I think it started after they really got interested in IBC and started seeing the opportunities that they could create for themselves with IBC.
The second one for sure.
Yeah,
Uh,
he had a W-2 job, started a side business.
yeah. These are people that I've known a while and yeah, started a side hustle. It took off. It turned out to be phenomenal and it replaced his W-2 income and then exceeded it. And he was like, well, I'm quitting this W-2. And I
Yeah.
guess the more important thing is, excuse me, is that he really enjoys the work, the people he gets to interact with. And it's his business. He's an entrepreneur. He sets his
Hmm.
own schedule. He works when he wants to. And I know he's busy as all get out.
Yeah, which is a great problem to have as an entrepreneur,
That's right. That's right. And he
right?
just had his sixth child.
Holy cow.
Oh yeah, he's got a bunch.
What kind of idiot has six or more children? No,
Yeah.
I'm not making fun of you, Rob.
I can't point to him.
This guy.
There's no...
You're, yeah, Paul's pointing to me. I've got seven. And the house is actually quiet because nobody's here right now. Hannah took him out of the house to let me record.
Oh, that's good.
Yeah. But you know, one of the biggest things that your duty is to create a legacy as well.
Yeah.
Success is your duty, but part of that success is legacy. If you acquire a lot and then burn it all up before you're gone, what have you left behind? You know,
Yeah. I think this depends on it real, because some people don't see it or they don't care to do it or they think they're going to spoil the next generation or something. I've been thinking like Nelson, like this equal distribution of age classes, instead of talking about trees, we're talking about human beings, right? And, you know, what are my grandchildren going to be like? Are
hmm
they going to need a tremendous amount of money to assist them in doing something? Maybe they have a medical condition. I don't know.
right.
But my gosh, I'd rather keep some doors open and I can do it very efficiently. And I don't know if this is true, but I think it is. The most efficient way to pass on generational wealth is using this.
100%. I can't think of a more efficient way to pass on wealth than
And
income tax free death benefit that you
yeah, like
earn pennies on the dollar.
right? Pennies, I'll
You
give
pay
you
pennies
dollars,
on the
right? You give
dollar.
me pennies, I'll give you dollars.
Yeah.
And there's no probate involved, there's no stuff in the will. The life insurance companies would be like, "Who's the beneficiary?" Up. Hey, come collect this check.
Yeah.
Where do we send it? Right? So, speaking of that, make sure you keep your addresses updated because sometimes they can't find people. So,
Mm. Yeah.
you got a relative out there, if If you don't know if they have life insurance, you might want to ask. Happens all the time.
Yeah.
Happens all the time.
Well,
Anyway,
so you
that's
said an excuse some people say is I don't want to spoil my kids, so I don't need life insurance. That to me is the laziest thing in the world to say. It's like somebody saying money's not that important to me. I make enough. I don't need any more. You're lazy. Let's just call a spade a spade. You're just being lazy and you're making an
that's
excuse
why
for
they
not.
invented the 401k
Right. You're
to
making
make you even
excuses to
lazier.
not work harder, right? To
Right.
not meet even get close to your potential. But you don't have to spoil your kids. Ever heard of a trust? Set up a trust and tell the trust to send out $50,000 a year to your kids for the rest of their life or until the money runs out. Is 50 grand going to spoil anybody? Make
I
it
got
30
one. I
grand,
think I
whatever you
figured
want.
out how to do it. The trust can match their income.
Ooh, that's nice.
I
Oh,
just came up with that. That just hit me.
that's brilliant,
Is
man.
that
Because
good?
yeah, that's well,
So
talk
they're
about
incentivized to do better and better and better because all right, I make 50, I get 50. If I make 100, I get 100. If I make 500, I get another 500. Until it's exhausted, right?
yeah. Or hey, the trust will pay your tax bill for you.
Right. That's a good
So
one too.
make as much money as you possibly can because you don't have to pay taxes on it because the trust is going to pay your taxes. How cool
Right.
would that be?
Oh my goodness.
These are some great
Hey,
ideas.
we need to patent this. No. I
Yeah,
want a nickel for every time someone comes up with this.
I like that. That's like I mean, that's really motivating somebody to go out and work harder. Like the
Make
government
sure
does a
that's in the
great
show
job.
notes so we don't forget.
Okay. Yeah, the government does a great job of demotivating you from making more money
They do.
because you try to
It's
make all this money and then in December you're like, "Oh man, I hope I don't get a big lump of money this month. I hope I have a bad month so I don't have to pay taxes on it in a couple months."
it's debilitating.
Yeah.
One of my office mates is his wife has started a business and doing very well, and they just had their first year in the business, and we're like, oh man,
Yeah.
we had to pay a lot of tax. I was like, yeah, like all this crap you hear in the media and from certain politicians, from one side of the political spectrum, like yeah, make no mistake, you're paying most of the tax. All these people over here, you're supporting them,
Yeah.
and it's true.
100%.
Yeah.
Yeah. Well, let's end with some book and video recommendations. So one thing, and I'm going to put it out here to hold myself accountable to do this because I always have grand plans for the summer. I'm going to do this and this and this with the kids, and
Yeah.
educate them or make these memories. I'm going to do this year. I was searching through Amazon Prime the other night, and I came upon a Napoleon Hill series of videos called Napoleon
Huh.
Hill's Master Key. If you've ever read Napoleon Hill, Think and Grow Rich or Outwitting the Devil or The Laws of Success, like brilliant books, brilliant man from, he knew, Carnegie and
Yep.
Rockefeller and Edison and all those guys. He studied them. But he's got a 15 episode series that you can buy on Amazon, and they're like 13 minutes a piece. And he goes through one law in every episode. So I'm going to go through those with all four boys this summer and make it through every one of those, maybe do 1 to 2 a week until we get through them all and spend another, watch the video and spend another 20 minutes talking about that and give them all a notebook and they can make their own notes. Like something like that is priceless. If somebody would have done that for me when I was a kid and kind of opened my mind to the power of thought and planning and goal setting and all that. So Napoleon Hill, anything by him, read it. What are some other of your favorites?
I'm trying to think back to like 2016. What got me kind of going was Rich Dad Poor Dad. I had heard of the book for a
Yeah,
long time. I just had never read it, and that got my mind
it was a
thinking
complete
of
mind
I need
shift.
to, yeah, mind shift. I need to acquire assets. Simple, right? Instead of
Yeah.
liabilities, acquire assets.
And they don't have to be real estate just because he talks about real estate. They could be something completely different.
No, to be honest with you, the equity I can produce and the passive income I can produce might be. A lot of people buy real estate, in the military, and they have no cash flow. Their rent pays the mortgage, so they're
Yeah.
building equity only. Um, that's whatever. Uh, but the passive income that I can get from a policy just by funding it with money I already have is
Yeah.
it's quite easy, and it's guaranteed. I don't have to do anything. I don't have to interact with human beings. I can just pay a premium and then 20, 30 years down the road have a massive amount of tax-free passive income
Yep.
that will last me forever.
Yeah.
It's just easier. It's different,
I hear
but
it.
again, focus what you're good at. Doesn't have to be real estate. And we know people that kick ass in real estate. Great.
Yeah.
Um,
It could be a teeth whitening business.
could be a teeth whitening. It could be maybe you're good at selling cars, high end cars, like BMW.
Yeah.
You go become a BMW. I know that I could walk into a dealership probably and be the top salesman in 90 days
Sure.
because I love cars.
Yeah.
You know what I mean?
Yep.
A lot of these people don't. It's a job for them. I
So that's
love
in your
automobiles.
DNA. Like that's
My
part of
DNA.
how you're made up. Like Garrett Gunderson has a lot of books and he talks a lot about investor DNA. So I mean, if you don't want to invest in real estate because everybody else is doing it, maybe I should do that too. Then don't do it. Like I didn't enjoy it, so I found something different. So find something you enjoy and just focus on that, man. Become an expert and just see where that leads you. But you need to do that with a large base of capital behind you. That'll be the best place to do it. The best way
No
to do it.
question.
Yeah.
You're never going to complain that you have too much capital.
It's true.
And if you end up using that capital to leverage your own unique ability and whatever that is, maybe you have a passion for something. I've had some clients say, I don't want to do this for the rest of my life, Paul. I have other passions and other pursuits I'd like to make. And I say, well, what are you going to need what could help that endeavor? Capital that you can access.
There you
There
go.
you go.
Good way to sum it all up. So, all right, everybody. Well, hey, enjoy the summer. Enjoy the warmer weather. Get out to the pool, the beach, the lake, wherever you're going.
Be safe too.
Be safe as always. Yep. Have a good week, and we'll catch you next week. Until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.